plant is almost 20 megawatt. What company is having all put together, rooftop and ground mounted. Again, company is planning for 12 megawatt solar. It has already been initiated and we got initial approval, and we expect that this 12 megawatt solar plant would be operationalized or commissioned before end of this fiscal, that is March 25, and further we will be benefited by the power cost reduction. In terms of segmental revenue, compared to previous quarter, passenger vehicle segment has grown up. As I was mentioning, that auto component business in Europe and US, it has been increased mainly into the passenger vehicle segment for the transmission parts, chassis part, and certain steering and suspension assembly parts. So there we got a positive response, and we have added new customers in that segment also. In industrial segment, it has been decreased somewhere about 8 to 10%, and compared to previous quarter, which was 20%, and in this quarter it is 18%, so almost 10% reduction over there. At the same time, the same numbers are there in the CV and heavy commercial vehicles. EV, again, we are near to 12%, 10 odd percentage on quarterly numbers kind of thing. So we have a quite balanced segment-wise revenue also, and that we will be able to manage what we had, and broadly 40% into the passenger segment, 10 to 12% into the EV hybrid, and remaining into HCV and commercial industrial applications. Comparing to the total revenue for this quarter, we have recorded 316 crore vis-a-vis 320 crore of the March 24 and 314 crore in June 23. In terms of domestic and export, my net revenue is somewhere about 160 crore from the overseas domestic market. That includes the number of my scrap revenue also, and 151 crore on the overseas kind of business. Again, EBITDA, as I have told you, it is 76 crore, which was almost couple of percentage on higher side compared to the previous full year, previous fiscal, that is FY24, where we had 22%. In this particular quarter, it is 24.2%. As I was mentioning, that solar has also given me a positive impact here. That is how. In terms of PAT, the last year, entire year, what we have recorded is 156 crore. Against that, in this quarter FY25, first quarter of FY25, almost 50 crore what we have recorded. Annualizing to this number, it is coming to 200 crores PAT. In profit before tax, it is 66.6 crore in this quarter, and which was 242 crore in the previous fiscal. Again, to annualize this number, it will cross somewhere about 265 crore annually for this current fiscal, what we are expecting. Definitely, company is having quite positive operating cash flow, and it has resulted into the all my positive capex, as well as it has helped me to invest the spare funds, and we are getting some kind of additional revenue because of that. Company has almost spent our capex in this first quarter FY25. We have spent somewhere about 10 to 11 crore rupees in the plant and machinery and the solar side. Net debt, as we have already mentioned, it is a net negative debt company. Company has some good amount of short-term surplus, no debt, no working capital, no long-term debt. It is zero debt company or other negative net debt company. In terms of return of equity, definitely in FY24, it has gone down. That is because of extraordinary adjustment what we did. Otherwise, it is in the range of 25 to 28% for last 3 years. And we expect further to be increased. The detailed numbers, operating numbers have already been stated over here. Operating numbers as well as my balance sheet numbers, quarter on quarter and the previous 5 fiscals. This is all from my side for this presentation part. Now I request the Equirus team to initiate the question and answer session.
Thank you, Arun bhai. We are facing some technology issue over here. We're not able to see all the participant names. I'll just request everyone who want to ask question, please raise your hand. Firstly, it is Abir Kattiaran. Please go ahead. Abir, please unmute yourself.
Hi guys, am I audible?
Yes.
Yeah, so this is Abir from Neo. So my first question would be the 35% kind of degrowth that we are seeing. How much of that, if you could bifurcate, would be bearing rings and in just the export segment, and how much of that would be auto components?
See, the number 35% is what I have told. It is specifically for the bearing, and again, into my overseas business of bearing ring. If you compare my domestic bearing ring business, it has increased by 18 to 19% on quarter, comparing with the previous quarter. So this 35% is only for the bearing ring from the overseas market.
Okay, understood. And the auto component growth for export market, would you like to share that number?
Auto component is some couple of percentage more. You can say, if I'll give you a precise number, say for example in Q4 it was 104 crore, and in Q1 of FY25 it was 108 crore.
Okay, understood. And also, if I look at the BEV component of your revenue in FY24, it has fallen since FY24 in Q1FY25. So is that something to be?
Nothing specific over there. That is because of some time lag, and as I was mentioning that we have added new customer in the European market, and they have some kind of this, because of the container congestion and availability of container at high cost, they have something deferment over there. But broadly, our target is somewhere about closing to maybe 10% by the end of this current year.
Okay, thank you. That will be it from my side.
Hi, should I go ahead?
Yes, please.
Yeah, hi, sir. Good afternoon. Thanks for taking my question. This is Sonal here from HSBC. Just wanted to understand, first, could you share the other operating income for the quarter and scrap revenues?
Yeah. Sonal, scrap revenue for the quarter in terms of amount, it is 22 crore rupees, which was almost say 21 crore in Q4 of FY24, so March quarter. For the other operating income, it is mainly my interest income and the amount what we have some surpluses that we have parked into the short-term investment. So that is somewhere about 40 million out of this 53. So you can say 4 odd crore is that income only. And my foreign currency fluctuation is somewhere about 7 to 8 million and certain miscellaneous income.
Yeah, no, I was asking for X of this 53, what is the other operating? I mean, which is coming in the revenue.
Yeah, that is scrap only. Apart from that, it is scrap, which is 22 crore. And export incentive, which is 4.5 crore.
So 4.5 plus the FX, right?
No. Export incentives and scrap all put together with the net revenue, that comes to 311 crore.
Got it, sir. Good.
Right.
And so, got it. Thanks. And so just to understand, right? Like, I mean, we've already, I mean, while we've been winning new orders and there has already been a significant decline in European markets, right, over the last year or year and a half. So, I mean, like, just how much is Europe for you now, right? I mean, like, it was already 15% last year, right?
See, even as of now, let me tell you, my Europe is somewhere about 16 to 17%. No doubt we have reduced, rather we got an hit in bearing ring, but at the same time we got an new customers for the auto components in European market only. So we have the same kind of number or bit incremental. And maybe by end of this fiscal, we are expecting at least 20% from my European business. Because again, the bearing ring, what has reduced in particularly this quarter, we expect not immediately, but down the line 2 quarters or maybe in the last quarter of this fiscal, definitely it would be compensated.
Got it. Got it. And just lastly, and what is the capex for this year?
Capex broadly, as I told you, we did somewhere about 10 odd crores, and considering my remaining capex for solar and all this thing, we would be ending in between 40 to 45 crores.
And this in, I mean, like for the 12 megawatt solar, how much do you?
12 megawatt solar, it is somewhere about 27 odd crores, something like that. And remaining is for my incremental value added processes or maybe small equipment, small forging presses, etc. What we are going to add.
But there was also a new forging press that we were adding, right? Like, so for that, that is, we
We have
paid
already,
partly.
yeah, we have already added in the previous fiscal only the Sakamura forging line. But that forging line is capable to produce certain range of products, mainly for the bearing ring business and small auto components. And there are certain other segments or other auto components which will not be able to produce from that forging line. For that, we are adding new press, forging press, and that individual press may not be costing more than 7 8 crores, etc., because the remaining facilities are already there. So only we need to add for these kind of forging press, which will help me to get the quantum of auto components of particular range.
Got it, sir. Just sorry, last thing on the solar thing. Now with this 12 megawatt, how much of our internal requirement would be catered by this solar?
You mean to say the additional 12 megawatt or till now?
So we have 20 plus 12. So currently, where are we and how much incrementally become?
You can say currently, after installing of this 11 and a half megawatt, we were somewhere about 30% of my overall power cost, this thing. And after adding of this 12 megawatt, again, maybe uh, 5 to 7% additional what will be. So broadly, after adding up this 12%, 12 megawatt, we would be somewhere about 35 to 38 percentage of my overall this one. Because we had certain other windmills also, and all put together, as of now, it is giving me a cost saving of somewhere about 30%. But if you put all put together, it is somewhere about 29 30 megawatt as of now. And if we are adding it by 12 megawatt, again, it give me a additional cost reduction of somewhere about 7 to 8%.
So, okay, so it'll lead to another 7 to 8% reduction in your power cost.
Yes, yes.
No, what I meant was out of our total
It
requirement.
would be hardly 35, 37, 7%, 40% max, you can say. But once my, the operations or the operations will be increased, definitely my power requirement will also go up. So broadly, it would be 37 to 40 percentage of my power consumption in total. After adding up of this 12 megawatt can be compensated.
Got it, sir. Great. Thank you so much.
Thanks, Sonal. I think we can just go ahead with the participant who raised his hand. Please uh, mention your name and ask a question.
Okay, shall I go ahead? Am I audible?
Yeah,
Yes.
Okay, so I am Niril Pare from Origa Capital. Uh, I am new to this company basically, so I had some basic questions with respect to quantitative facts, first of all. So, my first question is like, from a global perspective, in numerical terms, what is our opportunity size for the bearing rings and auto components that we produce?
Uh, Sir, it would be very difficult for us to tell you the global market size or the potential for our size of company because, first of all, bearing ring market, it is quite a large market, and we are into a particular addressable segment, say from a particular range of the products what we are able to produce with the facilities what we have. So it would be difficult for us to tell you that globally how it would be, but definitely in domestic we have somewhere about 30-35 percentage of my overall bearing ring business, and again a bearing ring which are produced from a forging route. There are certain other production method where the bearing rings can be produced depending on the applications of the particular bearing. So again, in auto components, we are manufacturing only transmission components and a few of the chassis components. But globally, to measure it out, I think it's difficult for us, or we don't have that.
Okay, yeah, fair and clear. The second question that I have is again with respect to the players. So, Timken, Schaeffler, SKF, these bearing companies globally, like what's the in-house components that they manufacture in terms of rings, and what are they outsourcing to players like Rolex rings or are other domestic players? So, do you have any quantitative data with respect to that?
See, to the best of our knowledge, the couple of main bearing manufacturers, as of now, uh, we don't think they have their own in-house manufacturing facility for the bearing ring. Only maybe a one group having a couple of plants in overseas where also they are trying to close it down and phase it down by maybe in next 1 to 2 year, which they have already declared. So broadly, these the names what you have taken, we doubt that none of the company is producing any kind of forging or rather any kind of bearing rings in house, and majority
Okay.
of the entire they are sourcing from outside.
Got it, got it. That's very clear. Another question, if I may chip in, is basically from domestic perspective, we get a good idea about what is our domestic players and who are all there. But from a global perspective, do you have any data with respect to who are all our competitors who are manufacturing bearing rings?
We have but there are a few bearing ring manufacturers at US, even in Europe, and majority in Japan and China. They are, but the bearing ring. If you ask me, the larger size or the biggest bearing ring might be of 10,000 or something like that. But what we are able to produce is up to 900 kind of ring only. So in my particular addressable segment, there are few unorganized players in domestic as well as few organized in overseas market with whom we are competing. I cannot name those companies as of now, but I would like to highlight that apart from bearing ring, there are many other value-added processes which is available at Rolex and which gives some kind of better USP compared to the other players. And under one roof, the kind of capabilities what Rolex has established with the various value-added processes, and to cater the versatile range of a particular customer, say for example one customer in India having the same plant, same kind of bearing plant at overseas, but their requirement of they are producing different kind of bearing ring. So I can Rolex as whole, they can, or rather it can be provided. So we have those kind of USBs and long customer association with few of our bearing ring customers, we have more than 2 decades or something like that. We are associated. Apart from these abnormal factors, particularly in Europe or this thing, year on year, we are adding new components. Maybe if possible, we are adding new plant of the particular existing customer. And all these plants are working as an individual profit center, cost center. So there may be a different kind of bearing rings what they are producing. And so we have that kind of opportunity.
Got it, sir. Thanks a lot for answering this question. It was very clear.
Thank you. We move to the next question. Please unmute yourself and go ahead.
Yeah, hello. Am I audible?
Yeah.
Yes, yes.
Yeah, sure. So Jason from IDBI, sir. Hiren, sir, thank you so much for taking my question. So, sir, first, I want to ask you on, before we had taken the CDR write-off of around 320 million, we had said that basically we'll get some more flexibility on the lending part to restructure our loans and all that. So how is that going through, sir? How is just an update on that?
Yeah, first of all, I would like to update that we
Yeah.
are not restructuring it
Ah.
and we do not have any plan to further borrow. It
Okay.
is the right of recompense, something what we had borrowed in past and what we have already repaid. Now, some kind of ROR, what we have estimated in March 24 quarter, which was somewhere about 32 crore. Again, the same matter is there with the bankers, and in last consortium meeting with our bankers, they are working on it. They are processing it because there are 6 nationalized banks. So maybe down the line, they have asked maybe 40 to 45 days to again revert. But as of now, there is no further update on that. We will be having some more clarity in the next quarter.
Okay. So, I mean, so this amount is already taken off. Is there more chance of another, expense on the P&L owing to this account?
Uh, Possibilities are there.
Okay.
Yeah.
Okay. For the ROR itself.
Yes. Because there are different permutation combinations on that.
Okay.
So conservatively, I'm expecting something would be there.
Okay. So what I just understand, I mean, in terms of the matter, paying off that amount, and after that you are free to take a loan from some different kind of banks or
Yeah,
a set of
definitely.
banks which you choose, which can give you a better rate. You don't need to stick to.
It's not only the borrowing part or banking. There are
Right.
many few other restrictions or something what we had, that distribution of my profit and
Right.
appropriation changing into capital structure. Those have been withdrawn, and
Okay.
we are very much inclined to just close it down maybe in next quarter or maybe in couple of quarters.
Okay, so there could be some more amount coming from that perspective. Right. Sure. That's still to be finalized. Okay. So, sir, my next question is just wanted to understand, sir, our, in bearing rings on automotive. So bearing rings, typically our export and domestic is around 50-50%. And automotive is more export oriented. I believe it would be around 70 export and 30 domestic. So I just wanted to know, I mean, would you have an approximate split for bearing rings as well as automotive for both domestic and export? You could give me a number for 23 and 24 both.
Yeah, Jason, for previous 23 and this thing maybe 24, if you want me, I can circulate separately because and for this particular quarter, if I'll tell you, rather I have already given that overall bearing ring business is somewhere about 46% of my net revenue, which is apart from scrap and export incentive. Say that number was 284 crore. Into that, my bearing ring business is somewhere about say 1,330 crore. So that is you can say part of 46% odd something for the overall bearing ring business. And remaining for the auto component business for this particular quarter, it was 1,552 crores.
Sir, could you just repeat the bearing rings number, please? I just missed it. Bearing rings, repeat.
Bearing ring number for this quarter,
Yeah,
it was 131 crore.
okay.
And auto component business, it is, or rather it was 153 crore.
Okay, sure. And what was the number last quarter? If you have that.
Why you mean to say March
Yeah,
quarter?
No,
it
not
was
March number. Q1FY24. That is the June last year.
June last year. If you okay, it was bearing ring. It was 151 crore,
Okay.
and auto component.
Yeah.
It was 140 crore.
Then got it. Sure. Sure. So got it. Got it. Got it. Thank you so much for that. Okay. So this so you're saying on an annualized basis you can come back to me on that on the split, right?
Yes, sure.
Okay. Sure. And sir, just wanted to know also, last time we had spoken about that you had seen some green shoots in Europe, with demand coming back. But now again, we are talking about the weakness. So, sir, from a long term, from a medium termish perspective, FY25, how do you look at Europe? Is it going to be weak? Other players also are saying that
See,
probably it could be
particularly,
weak. Yeah.
yeah,
So just wanted your view on it. Yeah.
as you people are there and you have the various industrial this updates on that, definitely the people with whom we are talking in our customers, or maybe in our nearby other industries also, they are facing huge amount of, or rather, setback in as far as European supply is concerned. Again, see something what we discussed before 3 months back, and in this 3 months, you better know that there are certain other geopolitical factors have happened over the overseas, which has again given some kind of negative impact on the European segment or overall export from engineering goods from India. So there we expect that it may not be recovered immediately. It will gradually improve, and we expect that we would be targeting 20 odd percentage revenue of my overall revenue for the European market in this current year.
Okay.
So we
Okay.
expect something, some better numbers or more significantly updated or increased number in the third and fourth quarter.
Sure. Sure. Sir, I just wanted to also understand, just for my knowledge, so you have this end user segment which you give, right? With PVs and industrial. Of course, industrial is seeing weakness. Okay. Now I just wanted some clarification. So, of course, auto components is purely going to auto. So there is only bearing rings which is going to industrial as well as automotive. So that part which is industrial is only the bearing rings, right? Is
Yes.
my understanding correct?
Yeah. Mainly in
Yeah.
the industrial segment, it's not obviously not auto components.
Yeah, it's bearing rings, right?
Yes,
So
yes.
that's the bearing. So basically, you would know which ring goes to which segment. That's what my understanding was, right?
Because in
Yeah.
industrial, it's a multiple this thing.
Yes,
In
yes, yes.
industrial, it is a equipment manufacturing, in certain
Yeah.
infrastructure kind of thing.
Right.
So there are multiple applications.
Okay.
And even the same kind of bearing may have multiple applications.
Okay. So
Yeah.
that's what, sir. My question was just how would you understand that which bearing ring is going to an auto or an industrial? I mean, do you have that kind of just wanted some color on that only?
See,
Yeah.
as you already, the given the numbers, say for
Yeah.
example, 25-27% of my production of
Yeah.
overall business, you can say that
Yeah.
goes to the industrial segment.
Yes, sure, sir. So I just
Right.
wanted to know why is it weak, sir? This I mean, we are seeing some weakness in the industrial side. So why is it weak?
But there also,
yeah.
there also I have something from the European market, and in domestic market, the way it has, what we have expected, it has not grown. That is why.
Okay,
Yeah.
okay. So some weakness from Europe and some. I mean, we were expecting that industrial should pick up after the elections with the.
Yes.
Yeah,
That
yeah.
is not as per our expectation, or
Oh.
even you can say not as per industry expectation.
Okay. Sure, sir. Sure, sir.
But
And
one
yeah.
thing I would like to mention that
Yeah.
compared to other industries, or maybe the numbers of other peers, or this thing, we have these kind of they have what you say, a flattish or the maintained quarter compared to the weak quarter for the other players or other industry, as you people must be observing.
Sure, sir. Sure. Okay, okay, okay. And sir, capex number you said 450, 45 crores for this year, right? Is that is
Yes, that is
and and
not
FY26, sir?
again more or less not significant. Again, it would be in the range of 40 to 50 crores.
Okay. And sir, just one final thing I wanted to ask. I mean, of course, our bearing rings should be in good shape. Domestic is looking good, you know. Of course, 1 or 2 quarter weakness is there. Uh, but just wanted your take on, the exports segment in bearings, the domestic, automotive. Of course, you have said last time there is good traction on the domestic front also. In terms of auto components, how is the export looking at? Just could you give me some color on how you're looking at the demand? Not even if not from a quarter perspective, from a long-termish kind of perspective for this year.
Definitely, particularly, see, we have added couple of very big customers for the European market for the auto components. So that would be an incremental numbers compared to previous fiscal. Apart from that, why it was weak in domestic auto component segment, couple of our customers in domestic, they in turn process certain auto components and they were exporting to their principal at Europe. Now, as I was mentioning, Europe is under shadow. So obviously their lifting or rather their demand, who I am considered as a domestic customer of mine, there I got a hit. Right.
Okay.
That is why the domestic auto component. But again, because of European segment and this thing. So, but as I was mentioning that we have added couple of new customers in Europe and in US also, something what it has been, started to the first quarter, it has bit deferred because of their change of design and something activity over there. But that also to be added as far as auto component business is concerned in the coming quarters. So broadly, our target auto component business would be touching 45 to 50 percentage something by the end of this current fiscal of our overall contribution. And I am very much, or rather, we are very much positive on the recovery on the bearing ring business also, because bearing ring as it is 46%, but we expect it would grow in the third and fourth quarter, and again it will cross 50% number of my overall revenue.
Sure, sir. Sure. And just lastly, sir, one thing from my side. So when you look at exports, I mean, you are of course trying to grow it. Just wanted your color on this. I mean, some view on this. Of course, Chinese have increased their competitive intensity a lot. Don't you face some Chinese competition in that end? And of course, there is a China plus one, but in cost, it's very difficult to compete with them. So just wanted your take on how that is playing out, just in terms of cost. Yeah, yeah. So yeah.
See, definitely we are facing some what you say contracts or extraction of Chinese market, but our customers, those are very much clear, or rather their requirement of the component is highly precision components, and they are ready to pay the the best competitive price without compromising on the quality front, because they are using these components on for a critical operations. So for them, pricing would not be much of the consideration. Again, the supply chain and highly precision component supply. That is the main criteria what they are. And again, what they are looking for, that by by going with Rolex, how much components, what kind of requirement in total they can be addressed. So it's a kind of one-stop solution or something like that. That my customers is always concentrating. And the the track, or rather the track record of my existing business with my existing customers, they are also aware. A new customer definitely check my history, that if I am there into the particular kind of auto component business, what is the age of my auto component business with a particular renowned group. So that will also give me some positive marks.
Sure, sir. Thank you so much, sir, for answering my questions. And sir, just one improvement. I mean,
Please
just wanted
join
to.
back with you because
Yeah, yeah, sure.
Thank you. The next participant can mute yourself and ask a question.
Yeah, hi. Good afternoon. This is Shraddha from Neo Asset Management. I just wanted to understand, I think a lot of it got covered, but just wanted to understand since you were, in the previous quarter, you were guiding for, and you did speak of, some pickup and new customers in Europe. And we were guiding for like a mid-teen sort of a guidance for this year. Uh, so, from your conversation, is there some sort of the existing customers, domestically who are supplying or exporting to the, their peers globally? Are we seeing some, substitution there, and hence we are losing some share? Is there any change from the previous quarter because of which, we are talking of some softness in the European markets?
Yeah, madam, couple of questions. What I think it's there in your first of all, the what we had in what we conveyed in the our previous meeting that Europe is picking, or rather, it's gradually new customers have picking up, or incremental volume has been added. So let me tell you that those new customers have already added, and they have in the particular FY first quarter of this FY25, the numbers of those customers have improved compared to the previous quarter. So that has already been increased, but the increase is less than the decrease what we had in bearing ring segment. That is why. So the new customer, what we have been informed, that is there in the numbers. Let me tell you one European customer, what it was there in FY last quarter of this one FY24. It was somewhere about say 14 crore of quarterly business, and in this particular quarter, June 24, it has increased to 22 crore revenue. So that has already been added. And what we told or conveyed that new customers are increasing gradually, they are increasing their volume and they are ramping up. Let me tell you, couple of more customers would be added in next 2 to 3 months, which will start it gradually, and maybe it would be having good number by the end of this fiscal. That is there. The second part of the question, that is there any substitution, or is there any the diversion of this thing? Touchwood, we didn't expect, or rather we didn't get any kind of feedback from our customers, existing customers. See, if it is the substitution, that may be because of, if my customer is having some issues in pricing or quality or maybe supply chain. These are the three reasons where my customers are going to or rather trying to switch over. But none of the customers came back to us in terms of revision of prices or maybe for other issues. So there we are, what you say, pretty sure, or rather very much confident that my customers have not moved to somewhere else, because we are talking with our customers on a regular basis, wherein a particular demand of particular segment or particular component have been reduced. It's not that they have reduced. Earlier they were sourcing 10,000 numbers, and now today they are sourcing zero. But that 10,000 numbers, it has gone to 4,000. And they are not going to source the same kind of component from the various suppliers. That's why.
Fair enough, sir. So it's just the demand slowdown,
Demand
which is
slowdown,
playing out.
and particularly in, and apart from that, this geopolitical reasons, what it is there for last almost 15, 18 months or 24 months, that is something creating hurdle.
Right. So if you can just, sum it up, like you said, second half we could see pick up in the exports in the European side. But just looking at the bigger opportunity, as you said, all the global, bigger customers, bearing guys have been gradually closing down their plants and have been outsourcing. So if you can just talk of that bigger opportunity, and hence in that context, how do we see the growth, in
See, I
this
told that it's not
next
that
two
my
years?
customers are closing down. They have already closed down long back. It's not
Right.
something, only one customer having maybe couple of plants in overseas where they have some certain kind of forging facility, which they have announced before 1.5 years back that they are going to close it down in all put together by 3 years. So maybe down the line, 1 year, 1.5 year, they are completely, they will also be out.
So incrementally, are we seeing more outsourcing happening?
Yeah, definitely. Not from the bearing ring segment, but overall, they are almost in the outsourcing only. So there would not be any something which they are going to stop and now outsourcing as far as bearing ring is concerned.
Sure, sir. So just any guidance for the next 2 years, how you would like to, as you had guided last quarter, any change
Guidance
in
for
the
the what?
for the revenue growth for the next 2 years?
Next 2 years. Uh, Madam, the kind of the order book or rather the program what we have awarded and what we are almost on the advanced stage with a couple of customers, which maybe in this December or so we are expecting to get those orders and nomination. So down the if you ask me for FY26, FY27, definitely we are expecting high teen to 20% growth year on year.
Sure. Thank you.
Thank you. I have two questions. So, Hiren bhai, while revenues have been flat YoY, can you share what if you saw any growth in terms of the sales tonnage in this quarter versus last year?
In terms of, let me tell you, the quantum of my this one, the sales, what it is there in the first quarter, it is somewhere about 11,000 metric ton what we have sold, and which was 9,900 metric ton uh, in the last quarter of FY24, that is March quarter. If you check the same number for the first quarter, it was again 10,000 metric ton for the previous corresponding year. So as I was mentioning that we had marginal growth in terms of sales tonnage also, but that is because of the reduction of commodity pricing.
And would there be some factor of the product mix change as well?
Yeah, that is always there, sir. That is always there. As we have, more number of components, as we have more auto components business, and that's why.
So when we see the volume revival in future in your export bearing ring and auto component, that time realizations also will increase compared to this quarter.
Yes, definitely, definitely.
And secondly, what is our cash balance right now, net cash?
If you ask me, as on date, I am sitting on a net cash, you can say, or including all my this thing, it is touching somewhere about 195 to 200 crores.
200 crore net cash on the balance
Yeah,
sheet.
yeah.
Okay, okay. Thank you. We have the next from Abir. Abir, please go ahead. Abir, unmute yourself.
Hi, yeah. So I just had a clarification out for bearing rings in Q1 FY25 out of the 131 crore. How much of that would be domestic and how much of basically what's the composition of this 131 crore between domestic and
It was
manufacturing?
86 crore, it was there in the domestic and remaining in overseas, which is somewhere about 45 crore.
Okay, and same for auto out of the 153 crore, what will be the breakup?
46 crore for the domestic and 108 crore for the overseas.
Okay, thank you. That's it from my side.
Thank you. We have one more question. I'm giving the permission Please.
Sutosh, I think it would be the last question. What?
Yeah.
Okay.
Please go ahead, unmute yourself and go ahead.
Hi, sir. This is Abhishek here.
Yeah.
So just a couple of things. You have called out that, the freight rates have also the sea freight rates have also impacted. So are you seeing normalization of that going forward happening as far as the sea freight is concerned?
Not for this quarter, maybe down the line, October, November or so, it may, because there are certain other, factors, with the US market business and with certain other country, China, US composition, the traffic has been diverted and yes, but we expect that from next quarter it would be bit decreased. Yes, downfall would be there. Otherwise,
Okay. And sir, in terms of the new order wins that you have seen in the last 2 to 3 quarters, a ramp up of that should begin sometime in second half of FY25 this year, or will it be even pushed back? How should we look at it?
bit it has pushed back, not 100%, but the suggested volume was reduced. What they were telling us, that has been bit reduced, but at least it has started. That's why I was just mentioning one of the number what we had for the the new customer in the last quarter. It was hardly 14 to 16 crore. In this quarter, it has touched at closing 20 crores. So that has already been increased something. And another couple of one main US based customers, which initially it was supposed to be started in the Feb March 24, but fortunately it has started in the month of May 24 onwards, and we expect that to be picked up in the second quarter and third quarter onwards.
Okay. So, sir, the major driver for you to return to double-digit growth would be Europe coming back. Europe, if it doesn't
Europe coming back, and the main, even the segment, bearing ring segment, you know,
which is
because in Europe,
predominantly Europe, I thought.
yeah, definitely that you are right. And Europe again, we have added in last 1.5 year 3 4 customers for the auto components. Again, we are in dialogues with for a couple of other nominations for that. So we are expecting Europe also to be turned out. And same touchwood, we didn't get any kind of negative from the US and other markets. But we have good potential for the domestic also. I was mentioning that one of the our customer who in turn, domestic customer in turn supply to their principals at Europe, which was reduced almost 25-30% of their offtake compared to previous quarters. So that also to be revived.
Okay. So if Europe comes back for you, so Europe from a 35% kind of a decline, what you have seen in the current quarter,
For the bearing ring.
bearing rings, for
Not
the bearing
only
rings.
Europe, it's something overseas. Even in maybe certain segment of, you can say Canada, there also we face a bit of reduction in bearing ring business.
Yeah.
Yes.
So if that Europe bearing rings was to go back to kind of stabilizing volumes and that decline, and that itself will help you go back to a double-digit kind of growth. So
Yes,
Europe bearing ring has to.
Yeah, definitely in the because we have that kind of already established facilities for getting those kind of numbers, and we'll be having quite good turnaround on the bottom line also.
Okay, and Europe bearing rings is mostly industrial or is it auto?
No, it's a mixture of both, sir. Mixture
So
of
both are under pressure.
Yes.
Okay, and you hope to see recovery in second half of FY25. That is what the visibility.
We expect, very frankly, not expecting much of the recovery in the current quarter, that is second quarter.
Correct.
But from the third quarter onwards, we expect a bit of the recovery, and maybe it would be stabilized by the end of the fiscal. Again, subject to no any other,
Okay, and that is based on your customer interaction and the indication that they're giving.
Yes,
Okay.
very much true.
Okay, and so you wouldn't be planning out for any capacity expansion or anything of that sort, right? Given that
Not significantly, as I was mentioning, not significantly, because see, for the bearing ring segment, I do have already set up entire this facilities. Certain kind of auto components, or maybe a different kind of auto components in the particular transmission transmission segment, where we need to expand because of my booking at existing level. There we are adding up few press shops, furnaces, etc.
Okay, got it. Great, sir. Thank you for so much for
Yeah,
answering my
thank you.
questions. Wish you all the
Thank
best.
you,
Thanks.
Abhishek.
Thank you, Anyway, we can close the call now. If you have any closing remarks, you can give.
Yeah. Thank you very much for all the participation and very much thankful for the patient hearing. And I hope we have addressed the observation or rather the queries of our esteemed investors and the market analysts. Thank you very much.